Hey everybody, still here for the Daily Market Pulse. It's Monday, March 24th. We saw stocks ending off their lows today after another sell-off following Friday's sell-off as well, but today was in lower volume. We're still under pressure. We do have 8 distribution days on the NASDAQ, 5 on the S&P. Today did not partake in that count. That was all last week. So with that, we've got that high of a count. You'd have to almost anticipate that the markets are going to go into a correction. We saw something similar about a month ago. If you recall, of course, back then I really thought and anticipated the markets to go lower. I thought it was seeming a little odd that they were going higher when they did and as high as they did as well. But of course, only a month later, here we are again in the same kind of situations. That kind of sort of quantifies, I suppose, as well, and qualifies that the initial thesis and theory was right, but that you can't get in the way of the market. So you just have to go with what it's giving you at the time, and that's that, and not be stubborn about it. So let's take a look at charts. Okay, Dow Jones, you can see very much a spinning top here. Friday had that big rejection off the high, closed down marginally. Today, right at the 8 and 20-day moving average as well. Quite confused, as you can see, a spinning top with an upper and lower shadow. Those are usually signs of just indecision and some confusion. So it's sort of trapped. I mean, if you look at the series of lows from the last several days and a series of highs from the last 2 weeks, it's a little bit pennant-like. It's almost a little triangular formation, right? Pennant-like. So, but it's above a declining 50, a rising 20. So it's trying to hang on. It's not very convincing, though. S&P, kind of the same thing, right? Came off the 1885 on Friday, came off the 1850 today off the low. So it's literally trapped in that little zone, resistance above, support below, polarity areas on both sides. So we will see what they choose to do. My suspicion is, well, do they go lower? But that's just because of the distribution day count for the most part, and the fact that they've not been able to make it above the previous high at all. So we obviously are above the original January highs before the correction occurred, but then it's gone sideways for most of this month essentially. So we'll see what they do with this thing. It's still kind of trapped, as I said. There's still a rising 50, but it's not very strong. So the Nasdaq continues to show the most weakness. It had the bearish engulfing off the high of the 43.50 area, which is nowhere near the highs. Well, not actually, it's close enough, but still lower than the 43.70 highs that were there before. So this channel seems to be working out pretty well, and it's also already in the 50-day moving average. Bounced off it just a little bit, which also coincides currently with the 618 retracement. So it's a reasonable place for a bounce, but it has to hold here. Otherwise, it's going to the 50% and possibly lower, where there's a window right below at 41.50 as well. Let's take a look at the TSX. So sideways remains with a dark cloud cover from Friday, kind of a spinning top-like formation today, holding a rising 20, but it is below the 8 moving average, so there's not much there. 50 is well below still 14,000. My thoughts a while back, I did discuss that. If this started to sell off, it could very easily come back toward 14,000 once again. So, and that would be the 50-day moving average, which makes complete sense. And that would also be where the breakout occurred, the level at which the breakout occurred above 14,000. So 14,000 being a key level here. And the DAX came off those moving averages. Remember, we had a dead cross 20 below the 50, and so certainly the lows were going lower. It also broke below the pivot of 9100. So for it to come off this now with a bear sash makes sense. This could come back to 9100 or lower, back to 89 or even lower again, with a series of lower lows overall long term, or actually, well, more of an intermediate term, I should say, since February. So there was a set of lows in January, a set of lows in February, a new set of lows here in March. So with now, of course, a lower set of highs, also February and now March. So at least if this is a high right here. So looking for lower levels here on this one. Treasuries higher, which we've talked about this before. If the treasuries go higher, what does that mean for the markets? Typically lower. So sure enough, Friday, Monday, we see green, and we saw red Friday, Monday for the markets. So there's room to the upside, as we saw also there's room to the downside for the markets. Room to 133, which is where it is now. 134, of course, is more likely level to start testing and competing for, with a series of higher lows at this point as well. So it seems inevitable that this goes higher, and then of course the markets go lower. Japanese yen. Yen just kind of going sideways. You're just kind of stuck to the 20-day and the 8 moving average above the 50 as well. The 50 is still rising, 20 is kind of rising as well. So it still looks like, if you just look at the 50, you'd almost think that that's the support, and it just looks like it wants to kind of glide this thing higher. There's still a neckline, of course, across 91, or pardon me, not 91, but 99. So it still looks like it can go higher. So we'll have to pay attention. Let's look at gold. It was looking like gold could be holding 1320 reasonably well. It had the big sell-off, and then it had a little bit of a spinning top, and then a bump up bullish engulfing on Friday with a little bit of a rejection of the upper shadow. And then today it just flushed. And the Bollinger Bands are now opening. So now, of course, now the only thought would be if it breaks below 1320, you're coming back to the 50-day, the 200-day as well, which is now flattening. And that would be also a certain type of retracement. I had this as a 618 originally, but that's based on a different high. If I go to this high now, if I use that high instead, and yeah, there we go. Now we're at 50%. So it could hold here. It could flush real quick and come back and bounce, but this is going to be kind of a critical spot, I think, right here for gold. If we look at silver now, it came all the way down to the lower trend and channel line and is holding for now, but it also, of course, it broke down below the original resistance of 2050. Barely acted as support. It did temporarily a couple weeks back in the first week of March, but since that time it's come screaming back, and it sells off, it pauses, it sells off, it pauses. That's based on those doji you see. So we had the dark cloud cover, we had a sell-off, then we had a doji, we had a sell-off, then we had a doji on Friday, and then another sell-off today. We're seeing a little bit of a green candle right now forming after hours, but it's got to hold the Bollinger, it's got to hold this lower trend line. Otherwise, it's heading back to 1950 or lower. Okay, crude. So it's holding at the 8, slightly kind of a rising trend. Ever since it hit the Harami Morningstar bullish piercing a week ago, it's just been kind of slowly grinding its way higher. It had that decent move on Friday, hitting just above the 100 century mark, and then today it hit that similar high. In fact, a new high today, but just kind of a spinning top with a higher close, mind you, but marginally higher. And so it's just kind of hanging on to these moving averages and holding above 99 for the time being. So still looking for 101 ultimately as a target, and then who knows if it gets to 103, 105 again. But 101 is the place I'm thinking it's going to go to. So if we go from here, we go to small caps. So they're the bearish engulfing Friday, and the sell-off continued on today, but still trying to hold on to that 117 area as a support area, as a polarity. There was a window there, 117 and a quarter. Bollinger Bands there. The rising 50 is there. So is this enough? It's now or never kind of thing, I think, over here. So this is going to be right now a kind of a box formation. So if it's going to be, the bulls are going to take over to erase some of these distribution days, they need to hold. They need to get back up and close above this bearish engulfing from Friday. Don't see it happening, but you never know. You never know. You just gotta follow what's there and take what you get. VIX. So here's the VIX. We had the little bounce on a Friday, and then a little bit better. It gapped lower on the open, went pretty much higher into 16, but couldn't quite get beyond 16 and retrace. It was interesting because the markets came off their lows, the VIX really came off their highs. So still not a big threat, at least it appears. The bulls, the buyers of the VIX are present, but they're just not piling in masses. So this support level perhaps in the markets right now might be the spot. If they start seeing some flushing go below that, you might start seeing this thing just absolutely rip. But it's, I don't know. I continue to see the bias, in my opinion, because of the distribution day count, and that sometimes that's just one indicator. Other indicators right now, at least, are still telling you that you've got at least some strength. The trends are still on your side. Support levels are still holding, and so for now, but it's iffy. It's like it's like thin ice. Okay, we'll leave it at that.